Thank you, Nikki. Hi, everybody. Welcome to this new second part. We'll go a bit more into institutional crypto adoption. So I'm Jérôme Bailly. I'm the Vice President of the Crypto Valley Association. So of course, I'm very happy to see so many people this year. I'm also working for Adnovum. We are a Swiss-based software engineering and cybersecurity, working with banks, fintech, and crypto. And yeah, today I have the pleasure to interview Catriona Kellas from Franklin Templeton. Catriona, you are international legal lead on digital projects. So. Yep. First of all, yeah, I want to, before we deep dive, I want to remember everybody, if you missed the news yesterday on our social media everywhere, we posted the big news. So yeah, Franklin Templeton is now a corporate member of the Crypto Valley Association. We are very, very happy to welcome this institution within us, because that's really one of our goals is to connect our Web3 and crypto industry with the traditional players. So thank you again, Franklin Templeton, and so thank you, Catriona.
Thank you very much. It's a pleasure to be here.
So, okay, let's first start with you, Catriona. Can you tell us a bit more about you, about your journey within FT, and especially with digital assets?
Of course, yeah. Thank you so much, Jérôme. It's a pleasure to be here. I feel like my suit alone marks me out as a lawyer, so hopefully I won't turn everyone off with lots of legal discussion today. So I think my journey with crypto really started back in about 2016. And I was working in Hong Kong, and it really felt at that time that crypto was booming. So a lot of my clients were starting to look at, ask me about these new digital assets, ask me about how to custody them, how to raise capital using ICOs. And at the same time this was happening, I was having a coffee with a friend that I worked with, and she was telling me that her son was investing his allowance at age 14 in Bitcoin and using crypto ATMs. And she was quite concerned about this. But I thought, well, if the young kids are doing it, maybe there's something really exciting going on that's really sort of cutting through. And I think that really sparked my interest in the technology behind it as well. So not just the assets, but what people could do with it and how it was really cutting through to different segments of investors, although perhaps 14 is a little bit too young. And then I came back to London, really refocused and pivoted back into my role at my law firm, which was very much retail product focused. So I'm originally a product lawyer. And then when the chance came to join Franklin Templeton and get involved in this newly created role to support them rolling out some of their innovations that had really been very US focused at first, when that chance came up, I jumped at it, to be honest.
All right. So I had the pleasure to meet your CEO, Jenny Johnson, this week. She traveled to Switzerland to meet some Crypto Valley Association member. So I had directly from her this brief. I had to admit, I of course know you as a giant asset manager. You manage 1.6 trillion, I think. That's correct. But maybe can you explain us and tell us the journey of Franklin Templeton within digital asset? Because I heard during this meeting that you started back in 2019. So I was very surprised, and yeah, that's an amazing journey. Can you maybe sum up the journey of FTA?
Yeah, 100%. And you're right, we're so lucky to have a CEO who genuinely believes in the technology and the power of that technology. And she's got amazing experience as well, and she talks very eloquently, much more eloquently than I would do, about how she came, her personal journey to that, from running the operations of Franklin Templeton to that role in CEO, and really pioneering for us that digital assets journey. And for us, really, I think it was around the same time, 2018, 2019, Bitcoin is, again, a buzzword on everybody's lips. But over in California, I guess the Franklin Templeton team were thinking about it a little bit differently and really focusing on how, or whether, in fact, whether and how we could deploy that technology within our existing business. So you mentioned $1.6 trillion under management. We actually quite uniquely used to do a lot of our transfer agency, so our record keeping ourselves. We didn't used to send that out to third counterparties. And as you can imagine, that results in a lot of records to be kept, a lot of data to be managed, lots of different systems, not necessarily interoperable. And that was really the problem we were trying to solve for us, to be a bit more efficient, and then also, getting interested in whether those efficiencies could be passed on to clients. And that was really the genesis of it. But I think we very quickly thought, in order to really innovate within this and build something that we could use, we would need to be genuinely invested into the digital asset ecosystem and genuinely into the infrastructure of the technology. And that's really what's led to some of the other sort of pillars of our digital asset strategy, where you'll see us running node validators. I think we've got across 12 different chains at the moment. And that's really been important for us to kind of understand really clearly how these chains operate, what the protocols do, how does validation work, how do tokens operate. And that's really been foundational in our future success with the Benji products. But we've also then diversified. We offer crypto ETFs and private funds, which offer access to multi-coin strategies. We've got model portfolios, lots of exciting things going on. But of course, I think what most people probably know us for is our tokenized money market funds. And that's really the fruit of that labor that went into creating that tokenized record-keeping system is our suite of tokenized money market funds.
All right, perfect. So let's now double-click, especially on that point. But before, to take everybody up to speed, because can you briefly explain us what a money market fund, not tokenized, but just money market funds is and how it works, and why is it so important in traditional finance?
Yeah, so I think it's probably quite surprising to everyone that suddenly money market funds are this buzzword because of the tokenization, because they've been around for quite a while, and they're probably not what you would think of as the most exciting of asset classes. But effectively, what we're talking about is typically a regulated structure. So in the US, a 40 Act. In Europe, obviously, we'd know them as UCITS. And really, the key thing to think about is that highly regulated structure. So the aim is to maintain a stable net asset value. In our case, that's $1 per share. And we can pay out yield. That's quite an important point. But really, the composition of the assets that's in the fund is very highly regulated, usually short-term treasuries, government gilts, money, cash and cash-like instruments, that kind of thing. And obviously, we're also highly regulated in terms of how those are custodied, how those are audited, and all of those kind of things. So really, before I think tokenization came along, you would really see it as an asset that perhaps people used for cash sweeps, for cash management, and so on. And what's really exciting, I think, is that adding the tokenization layer, and hopefully we're going to get to that later on, is how you start to see this very traditional asset become really exciting in terms of solving some of the problems that we experience in the TradFi ecosystem.
So it was like 2021, I think you started creating this product on chain and called Benji.
Launched,
And tell us why and how you can tokenize a money market fund, and how does that work?
Yeah, absolutely. So it's kind of going back to when I say that we've created this tokenized record-keeping system. That's really what's key when it comes to tokenizing, because in a lot of the conversations that I have with regulators, with counterparties and clients, they hear tokenization and they think, oh, it's a crypto fund suddenly. No, all we've done is put the legal record of ownership of those shares natively onto the blockchain. And actually, when you say it like that, it becomes a lot more simple. So the assets of the fund remain the same, the way we operate the fund remains the same, but we have, we've put those legal records of ownership, those share ownerships, directly onto the blockchain. So I think we're operating, I'm probably going to get the numbers wrong because we're adding all the time, we're operating across 10 public blockchains and 1 private in the US. You mentioned that we're operating internationally. We've just launched our Luxembourg version of the fund. We've just received approval in Singapore as well to launch a VCC structure there, and we've got a private fund as well. And all of those funds are at slightly different stages of evolution. Obviously, our most mature product is the US fund, and that's where you get the most functionality at the moment. So, for example, how we accommodate yield, we pay out a daily yield on that fund, and we airdrop it directly into clients' wallets, either in obviously whole tokens or fractions of tokens, depending on the yield numbers itself. And that's really sort of how we're operating it.
Yeah, you just talk about this public blockchain. So I have a question about public versus private blockchain. That's a discussion we hear very often in the space, especially with traditional finance company. But you choose public, and you choose several blockchain. Tell us a bit more about that.
Definitely. So we definitely think, and I think back at the time when we were first having these discussions with the SEC, there was very much a thought process at regulators and counterparties that private blockchains were the only, the only chains that were able to demonstrate these security and privacy characteristics that were so crucial. And so, we actually took a very different view. We thought the public blockchains were very much the way to go. And so we had to really engage with regulators and engage with the market to kind of counter and flip that thinking on its head and really kind of demonstrate how those public blockchains that we have selected can still demonstrate that good control environment, can demonstrate that resilience, actually, that's super important, as well as obviously being preferable from our perspective in terms of interoperability and being able to really kind of access the benefits of blockchain and scale and so on and so forth. And we have, I don't know how much you want me to get into it, but we have developed a very intense due diligence process that we put our blockchains through before we select one. So a client could come to us and say, we operate on XYZ, blockchain, Polygon, Arbitrum, whichever it is. We're already live on those, Stellar obviously, and we want to use Benji on it, and then we'll put it through our due diligence process. And obviously it has to meet certain factors and certain factors like uptime, transaction cost, third-party code audit, things like that we're looking at to make sure that we can really stand behind it when we're presenting it to clients. So some of those conversations, particularly in the early years, were quite challenging because there was this really ingrained attitude, particularly at regulators, that public blockchains were not suitable for this use case. But hopefully, I think we've seen that page has now been turned, and regulators in particular are getting a lot more flexible about what they'll accept.
You're talking about regulator. Can you say anything about different jurisdiction? You're based in London, but the headquarters is in the US. We've seen a dramatic 180-degree shift in the US when it comes to digital asset regulation. Any comment on that?
Yeah, it's quite fascinating for me because I've suddenly been thrust into this very international world where I'm dealing with lots of different regulators and trying to pick up the themes that they're all thinking about, but also noticing the differences between them. And I think over the last couple of years, we've really seen a shift in regulators kind of start to understand the technology. If you start, it sounds really ridiculous, but sometimes I just look at jobs boards and see, how many crypto jobs are being advertised at regulators. We saw it very much in the UK with the FCA really kind of doubling down on investment in specialists to understand the technology. But there are definitely regional differences. We have some super constructive discussions, very flexible discussions in the Middle East. I think it's quite impressive that I think VARA in Dubai is the only crypto-specific regulator so far that we've seen. Most are trying to do it out of their existing regulatory bodies. And ADGM is also very flexible. But then the Asian regulators are obviously putting a lot of effort in. We've seen really great strides with Project Guardian in Singapore, and it's been a very constructive dialogue wherever we've chosen to go, even if there are sort of local challenges and local concerns which may differ slightly. I think the mood music that we're seeing is positive.
And for Europe, you choose Luxembourg recently, like it was announced two or 3 months ago?
Yeah, we launched a few months ago.
So can you tell us why this choice? Who are your clients in Europe, and what use case do you see for institutional investor in Europe with Benji Luxembourg?
Yeah, so at the moment, we're very institutional focused outside the US. In the US, we've got retail and institutional, but definitely in Europe at the moment, we're focusing on institutional use cases. And I think when it's looking at those use cases, it's actually interesting to think about, well, it's one thing to just put your money market fund, put your records on chain, but we didn't really feel that just stopping there was really engaging with benefits of the technology. So what we've done is we've added 2 additional functionalities, which have then driven the use case and driven those institutional conversations. So the one way I think about it is okay, so how can we push forward the efficiency? And the way we've done that is by introducing instant peer-to-peer transfers of our tokens 24/7, 365 outside of market hours. As long as you're onboarded with us, if you're a Benji client, you can transfer to another Benji client instantaneously. And then linked to that, we thought, oh, well, is there a problem with how yield is currently calculated and paid out? So we leveraged the precision of the blockchain technology, and we've just launched an intraday yield functionality, which is patent pending in the US. But effectively, it means that if you've got several different transfers of a token between parties, perhaps in a collateral use case, where you might have an intraday margin call, or where several different parties might need to hold the token at any particular day, each one of those will get their pro rata portion of the yield for that particular day. So it doesn't just accrue to whoever was lucky enough to hold it at the end or at the beginning of the day. And so when you put those functionalities in place, suddenly you see these use cases really popping up. So I've mentioned the collateral use case, and that's probably the biggest focus at the moment. But we're also seeing interest from treasury functions, particularly for global treasuries who need to move money around very quickly and easily to different jurisdictions. And then looking forward, I think we can see Benji as potentially being useful as in stablecoin reserves, for example, but also as a money-like instrument. So is there a world in which we could actually use our money market fund shares to make payments or to engage in sort of high-tech barter economies? I think we're only just beginning to think about those use cases.
Yeah, you just talk about stablecoins. I think to be my last question. That's also the hot topic these days in the space. So what difference do you see between a tokenized money market fund and stablecoin, pro and cons?
I'm glad that you didn't ask me, is Benji better or not? Because I think for me, it's a zero-sum game. There's space for both types of assets. I mean, I think one of the things that sometimes maybe puts people off, particularly in a crypto-native world, is, when I say, oh, well, Benji is highly regulated, and people sort of shudder. But for us, of course, coming from that TradFi world, and with 75 years of engagement with regulators and engagement with those standards, that's not a problem. And we think actually, from a pros and cons perspective, that could actually be a superpower. Because if you think about one of the challenges that some stablecoins have with opacity, with concerns about the reserves, our reserves are audited, are visible, are highly regulated in terms of what they can hold, and they're held with regulated custodians. So, in a way, that's a real positive, I think, for the regulatory piece. Of course, the pro for a stablecoin is that it's much easier for the stablecoin to move through the digital asset ecosystem, and we don't have that flexibility yet, because obviously we've got to comply with securities laws, which is why I popped in that thing about saying, you can peer-to-peer transfers as long as you're onboarded with us and you've passed our AML KYC. And so, I think there's definitely a world where different clients and different use cases are going to prefer each different asset for different reasons, but they're both of them, I think, have great opportunities and great opportunities to collaborate. I mean, I said that, Benji could be a great reserve asset for a stablecoin, possibly solving some of that opacity and those challenges about reserves. So, I definitely think that it's an opportunity for both assets to move forward and get engaged in really exciting business.
Yes, collaboration, I think it will be the last word. I think we already experienced that with our new partnership of Franklin Templeton joining us as a corporate member. I was impressed on how you wanted to build bridges with our Swiss industry already from day one during this meeting with Jenny. So yes, thanks again for supporting our ecosystem, and thanks for the insightful discussion, Kat.
Thank you very much for having me. Thanks.